sure that yield is an important one, because then if it's bleeding your money and life circumstances change, you may be a forced seller. If you're an investor after capital growth now and working with clients that you do work with, tell me the three key things that you would look for, the three big things that are a tick that you have to go before you go into that suburb and have a look.
Vacancy rates would have to be definitely sub 2%.
Yep.
Basically, means you're going to get a tenant straight away. There's high demand for rental properties there. If you're chasing the short-term growth, I'd probably look at your days on market. How long is it taking to sell a property? If it's going to take forever to sell, you're not going to get those short-term gains there. And I always like to look at yields, how much return you get on your investment compared to the purchase price. So if you buy a $500,000 property and it rents for $500 a week, that's about a 5% or 5.2% yield. The vacancy rates, yields, and days on market. There's stock levels, stock on market.
Yeah. I mean,
they could go all day. Yeah.
I mean,
affordability, incomes. Yeah.
It's probably hard to nail down three around what you're looking for.
Yeah.
And as you said, it tailors to everybody's different.
Yeah.
But making sure that yield is an important one, because is it going to cost you out of your back pocket? Because everybody's life circumstances change. I see that all the time being an advisor. Someone, they're in a position in 12 months' time, and then they're in a different position 12 months' time. Life changes. It might be a different job, it might be a different role, you might get married, you might have kids. A family member may get sick, so now you're not working and you're looking after a family member. There is a multitude of different things. Life throws at us curveballs. So it's important that if you've got a buy and hold strategy, not a buy and hope strategy, that it's not bleeding you money as well, because then if it's bleeding you money and life circumstances change, you may be a forced seller. Thing that I always talk through with clients of mine is you never want to be a forced seller. So there's got to be a buffer in there for you around, what does it look like? Because if you are a forced seller, then you're susceptible to whatever that market's doing in that time.